Welcome back. We've been speaking about flows with EPFR's Cameron Brandt. We're now joined by Kaustubh Belapurkar, the Director of Fund Research at Morningstar. Good morning, Kaustubh. Thank you very much for joining us. We have seen a huge amount of FII flows, about 3 billion year to date and more than 2.5 billion coming from mid-February. Does it look like hot money? Does it look like long only? What trends are you delineating?
Sure. Hi, Lata. So if you look at the trend of FII flows, right, it's been a little wishy-washy and not a secular trend that what we've been seeing. There has been a fair bit of money that clearly has come in, sort of mid-February onwards, and we think it's more of a I wouldn't call it hot money, but there's a little bit of a creeping up of allocations that's happening on the India amongst the emerging market and the Asia Pacific funds. So if you look at the flows, we won't see much, large inflows coming in from an India dedicated fund or an ETF. It's largely increasing allocations from some of the emerging market and APAC funds.
Okay. Kaustubh, hi, good morning. What about mutual fund equity flows? In the month of February, it was just about 5,000 odd crores, a big slowdown compared to what we've seen in the past. What's your prognosis now?
Yeah, so I'm not entirely surprised that there's been a slowdown on a couple of factors, right? So one is obviously we have the election overhang that's come in, and so investors have been taking a little slow over the last 2 to 3 sort of months, and it has been increasingly kind of slowing down. So I'm not completely surprised by that. The other thing to understand is also the fact that this is typically tax planning time, and I wouldn't be surprised that some of this money gets replaced by money going to ALSS in the month of March. So that will also kind of prop up the flows in the month of March. So again, I think it's a short-term thing. Investors should come back. It's probably some fatigue because of market volatility, but the SIP flows still continue to be a healthy tick above 8,000 crores, which is definitely a positive sign.
Okay. Kaustubh, any trends you can glean in terms of what FIRs are preferring? Is it the old favorites, the HDFCs and their, the iShares, or are you seeing interest in a broader range of stocks?
So I think largely it is, still staggered towards, some of the financials, the likes of some of the corporate banks. In fact, we're seeing some buying, HDFC has obviously been in favorite, but, the ICICIs and the Axis are seeing increasing buying from FIs. We also continue to see some buying on the tech stocks. So it's again, I think largely towards the large cap names, that we haven't seen too much activity as yet on the mid cap counters, at least from some of the larger FIs that we see.
What's your advice to investors with respect to debt funds? I know it's not a pertinent question to ask at a time when equities are doing so well, but in any case, there's been a lot of credit risk in the debt market. What's your advice now?
Yeah, so very clearly, I think it's a good time for investors to kind of reassess their risk. I mean, we've had a couple of situations, ILFS, DHFL, where there's obviously been some stress in the markets and investors have been spooked. I would say that every investor should go back to the drawing board and think about, these risks exist. Am I agreeable to, kind of take on these risks for high yields? If the answer is no, you're kind of spooked with these risks, and I would say get into the more government or AAA rated sort of, funds that invest into those. But if you don't mind taking on some element of risk to get a high yield, then you can stay invested in some of the, high yielding instrument, sort of funds.
All right. We'll leave it at that, Kaustubh. It's a pleasure speaking with you. Thank you very much for joining us in the conversation. Well, we just have a few minutes before we have the pre-opening.